Okay, it says I'm live. I'm inclined to believe it. Let me know if everything's working. I mean, Bitcoin's down 0.5%, so clearly nothing has happened today. Very slow day. Looks good? Okay, good. Good. Today was wild. I suppose it was. Okay. Brilliant podcast on Friday. Yeah, it was a lot of fun. It was a lot of fun. I enjoyed that. If you haven't listened to it, go listen to us speak to CMS intern about a lot of things. Basically, like sort of an introductory podcast, defining a lot of terms and just kind of de-jargoning the jargon. Okay, let's get into it. First of all, like the video, because why not? Second of all, thank you to FTX for supporting the show, specifically the FTX app, formerly Blockfolio. My friend used it to buy the absolute Pico top on Solana and only told me about it over the weekend. So you can make similarly amazing spot trades and not worry about liquidation. Best mobile app on the market. Go get it. I'm waiting for the bottom signal in the form of my sister complaining that her Solana is worth 0. So I'll let you know when that happens. Do you know where Don is long from? Quite close to the bottom. Quite close to the bottom. Okay, right. So we'll do chart stuff first, then we'll look at some data, and then macro general type of time frame bullshit. So, okay, so we'll start with the quarterly. And there's a lot of crossover between the quarterly, monthly, weekly, yada yada, just all the high time frame stuff, right? But we always start from scratch, so why not? We've got the lowest close at 35k, which is our current support. If you go on the monthly, it's pretty much the exact same level, right? So let's just label that 3 months plus monthly. So that on its own, right, if we're going to just focus on where the market is right now, the market is in an area of high time frame support. Okay, now if we add further color to this, we know that we've got the highest close resistance all the way back towards 60k, and then for a while we focused on the midpoint between those two, which is somewhere in the mid 40s. Let's just get that on board. Okay, 46, 47k, and that's sort of what we're left with right now. That's where the market is at. So basic high time frame eye test. If we are going to get a high time frame bounce from the bottom of the range, the logical target for it is this cluster in the middle of the range, which is low to mid 40s. Right? It'll look like something like that. And just get a thicker arrow. That's the basic sort of, we're in a range. You expect the range low to hold in those circumstances. If the market is actually range bound, then it's not like a breakdown or whatever. And your high time frame first trouble area for that is the midpoint of the range. That's kind of the basic eye test setup. There's a lot of nuance that goes into it, especially when it comes to time frames and timing a specific entry, etc. I still think these lows are somewhat vulnerable, but like basic structure is resistance, midpoint, support. The move from the range high to the range low has mostly played out if it is going to be a true range, and if you get even the most dead cat of dead cat bounces on the high time frame, all the roads lead to Rome, so to speak, and Rome is in the low to mid 40s, if this range thesis is correct. Okay, that's sort of the high time frame context. So if we go into the weekly, we can get some extra color. So where is this quarterly, monthly, whatever high time frame range low coming from? Well, as we discussed for months and months and months, well, it hasn't been that long, but it's been for a while. Anyone who reads Technical Roundup shouldn't be caught offside, right? Because credit is far as credit is due for, you know, ourselves and the system we employ there, ever since this failed breakout, our target was the range midpoint, and the bounces from there were meh. We just kept saying it was medium, don't diddle in the middle. And then ultimately, as all of this was happening, especially after this break from balance, our argument was 32 to 38k is the high time frame range low, and finally that was reached. So a lot of the stuff that we've spoken about just on Technical Roundup, again, it's free. Just go to trletter.com. I'm not trying to plug you anything. You are the product because it's free, mwahaha, whatever type of bullshit. But realistically, two core points that we've kind of tried to maintain. The first one was when this happened. The argument was that these liquidation-driven moves very often get backfilled, like those wicks. So trying to get super long the market while that remains untested isn't a good idea. And that played out. And then ultimately, the move from the range midpoint into the range low with this all-important 32 to 38k level, we've now got that as well, which is pretty nice, right? So within that consolidation here, which is how we've got it in the newsletter as far as I'm aware. Where is the market bounced? Yes, it is the monthly, quarterly level, but even just basic eye test, it's actually the midpoint of weekly support. So we're now back inside the old kind of reaccumulation range. If we just delete these levels for a moment and really zoom in on some recency. Also, from the last stream, we just talked about this market structure level being resistance, and, you know, that was a no-brainer. But in any case, in terms of where the market is right now, we're back within this consolidation, right? If we just forget the quarterly stuff for a moment, what are the relevant levels right now? We're back inside the previous range low, and that in itself offers levels, right? It's not just a big box, because we know that the most important areas are the range high, the range low, and the range midpoint tends to be a bit of an inflection point, right, between the two. So if we just overlay that, this is what we get. Okay, this is essentially what we get. The top of the range is around 38k, and if we look at the weekly time frame, we expect that to be resistance until proven otherwise, given the weekly closed below it. The range low remains untested at 32k, and the market's been trading quite a bit through, but more or less at the midpoint at 35k. Okay. You can see a long tail on today as well. So what does that mean in terms of setups or things to keep in mind? I mean, the first one is, unless the market totally disappears, and we'll discuss kind of the last-minute Coinbase savior that came into it, you're expecting some sort of consolidation within this weekly structure because it's the bottom of the range, right? And your support is the bottom of it at 32. The resistance is the upper part at 38, and the market currently is a bit close to balance. Now, given the weekly close, generally, if this rally continues, I think the first trouble area is 38 to 40k. I think at a push, if you're quite fortunate, you might get a retest of this pre-breakout cluster, but I'm not convinced this is the type of environment where you want to hold on to trades through resistance just to catch an extra, few percentage points or candlesticks, whatever. So I think short term, resistance at 38. I think that's good. That's not going to be broken on the first attempt unless something crazy happens. And similarly, support at 32, with the slight caveat that these lows here make me somewhat uncomfortable. And at least for my money, we haven't tested the extreme of support within this range, which is at 32k. Okay, so what's the high time frame picture? High time frame is that 30-ish equals support. And if we're going to get a real range on our hands, the type of macro thesis that many people are discussing, then your mid-40s is resistance. Okay? And in terms of really short-term stuff, where the market is right now, it's 32 support, 35 mid, 38 resistance. Okay? So higher time frame stuff, 30-ish to 40-ish is the kind of rotation on my radar over the next month or so, maybe. We'll talk about timeframes in a moment. As for really short-term trading, 32 range bottom untested, 35 mid, which is where the market more or less is right now. And the first level of resistance I've got, if this rally has legs, is the weekly level at 38k, which is the top of this prior consolidation. Okay. Now, I want to talk about timing a little bit. You're wrong, 20k incoming. I don't care. I didn't even say anything like that. You nonce. Okay. Right. So one thing I'll note in terms of time frames is that this shit can take a while, right? A lot of the time, these high time frame structures and retests, reaccumulations, range plays, whatever, we're dealing with like weekly, monthly, arguably quarterly structure. And therefore, it is very reasonable to expect those important areas, you know, for price to spend some time there, your entries to be retested, and just a bit of like churn, congestion, and slowdown in volatility, right? So, you know, if you missed this wick, I still think there's a pretty good chance that the market trades back towards it, and we spend some time tossing and turning within this consolidation. And I think if it does start to run immediately, that's probably a rally worth de-risking into quite early. Because the way you normally get, as we discussed last stream, trading at high time frame levels is that you normally get the first kind of snapback of the move when the first real evidence of imbalance kicks in, and then you get the higher time frame, you know, range, reaccumulation, whatever, before you get the high time frame move. So when you're dealing with high time frame levels that do their job, there's always a short-term rotation to be had, for which I think, you know, 38 to 40, if this upside continues, is a pretty good like area to reconsider that trade, or where it becomes far less attractive as a long. As for like medium term to arguably long term, right? It's that same 32, 38 where the market's going to spend a longer period of time. I know that's a bit clumsy, but just generally speaking, because we're also hyper-focused on the chart, and you want to catch the exact bottom and the correlation breaking, you see this Coinbase order book going crazy, you're watching it on the 5-minute, yes, there is very likely a rotation to be had from that, but also there's an equally high, if not higher, probability that the market kind of sticks around not terribly far from those entries, and the initial, or, you know, the immediate bounces or whatever get retraced to some extent. Okay, so if I try to summarize that, it's going to be a bit clunky. Okay, but I'll give it a shot. So macro. Okay, so first point, 30k-ish range. Let me just write this out and we'll go over it. Okay. Right. Let's start with this. So in terms of macro stuff, 30k-ish is range support. I say 30k-ish because that's this lowest close at the low to mid 30s. But we also have to be cognizant that it wouldn't be the worst or most unforeseeable thing if weakness persists to see a bit of a poke at these lows. I don't personally know how likely that is. I'm like undecided, to be completely honest. But in any case, the setup would be the same of you'd want a very quick spike and reversal, and for price to still end up at 30k-ish if in any case the range thesis is correct, right? So the macro stuff is 30k-ish as range support, and that means it's an area to look for counter trend bounces if you get a good setup. And also I think it's not a good area for fresh short positioning, because even in the most bearish scenario, it's just the least attractive area to make that type of determination. If this bounce has legs, mid 40k is where a lot of stuff lines up. It's the monthly and weekly range midpoint. All the slow moving averages levels are there. You've got market structure levels there, the range midpoint, yada yada, as I've said a million times. There's like a lot of stuff pointing towards mid 40s if there's going to be a meaty, visible, high time frame bounce. And again, that hasn't exactly been the case, but you always have to keep aware of what's above you and what's below you. Below that, this is again the, I guess, worst case scenario, because again, all of this is somewhat contingent on the market being remaining range bound between 30 and 60, and the most we can tolerate is like a short-term break through 30, which then gets reclaimed. But the basic premise this is operating on is that 30 to 60 are more or less the boundaries within which price is going to stay. But just to consider the counterfactual, below that, or if there's a break from 30k balance, the setups then become you either wait for a reclaim and then you get something risk defined, right? The market will tell you essentially where to put a stop, or quite simply, we get to have a, take an existential swing, sort of the existential long attempt for crypto, being like, this looks fucking awful, it looks dead, it looks like the bubbles burst, and God knows what the legacy markets look like at that point. 10 to 20k is the sort of now or never, and, black swan type of bullshit type of thing. One thing I'll note is that market structure is broken. That's fairly definitive on all time frames. On the weekly, you've just got a very clear lower low from the one we talked about last week. Whatever trend following metrics you use, we're way below all those slow moving averages, if you like, that type of thing. There's a lot of fixing to do off of a move like this, right? As for the micro stuff, because we're within that cluster, this weekly consolidation here, you essentially have 32 support, 3840 resistance, and the midpoint being 35 or thereabouts, okay? So let's just add some more categories to this. Setups, weekly 38 reclaim, prob strength continuation towards 40s, towards the 40s, okay? Until proven otherwise, range in 30s, back of mind, lows get spiked, nuke equals I will talk through all this, don't worry. Reversion trade, we eat shit with legacy plus lick event equals reversion trade, 30k failed breakdown into good reclaim equals range trade. Other / misc, chill the fuck out. Correlation breaking require more evidence. We'll talk about that in a moment. Be picky. Bottoms generally take some time. Even if 30k dead bottom, will get chances, higher, low, etc. Okay. Let me try to go through this. Because normally I could just riff off, but there's like a lot of information that I want to not forget, especially when it comes to time frames and different time frame trades and so on. So I just kind of want to get this down, and then we can just answer questions, right? So first thing, 30k-ish support, that's that quarterly level, it's the weekly level, it's the bottom of the range, right? The mid 40k is the bounce spot or the range midpoint, right? And there's like a million things going on there, but it's basically this area. You've got your moving averages and you've got your range midpoints and all sorts of stuff going on, okay? At the moment, as you can tell, I mean, look at this thing, right? It went straight down, went sideways for a bit, straight down, sideways for even less, straight down. There's no kind of visible high time frame move, bear market rally, bull trap, whatever you want to call it, right? Like in 2018, you were getting 60% rallies before the market kept nuking. This has just been straight down, and you'd be lucky to get a green week. So that's what this point is leaning towards, which is that if you do get a rally that's actually fucking visible, I think that a good confluence point to reconsider that trade, take profit, or where I'd expect market structure to become relevant again is in the mid-40s. Okay, and I think aiming much beyond that is probably greedy unless the evidence really warrants it. Now, below that, that is to say, if this entire whole thing, which is that the market's going to range somewhat between 30k and 60k, and we had a deviation to the downside, we can entertain a deviation to the downside, but ultimately the market finding balance between, in that type of area. If that is wrong, and I don't know, my mental framework for it, I see that as like a tail risk, maybe 10%. Depends what Legacy does. I don't think Russia's going to invade Ukraine, any of that type of stuff. But realistically, I'm entertaining that as a tail possibility that 30k breaks down and this is just like a high time frame complete nuke Armageddon. 10% chance mental framework. But if that is the case, you either wait for the reclaim, which would mean like something which looks impressively bad, and whatever happens below it doesn't concern you, and you only get involved back above that level. And I think that's completely reasonable. Or if you do want to get on the discounted do or die, fight for crypto type of long area, it's got to be 10 to 20k, which is made up of the monthly 14k level and the weekly 12k level. Now, is there any evidence at the moment that this is in play? The answer is no. But if I give it a 5-10% probability, I still have to consider it and know what I'm going to do if that is the case. And the final point is that market structure is broken. Again, that's evident from all the trend following tools, moving averages, ribbons, etc. And also just from last week, once this low was taken and it was actually retested very perfectly, market structure is pretty busted up and you've got lower highs and lower lows. It's especially clear on the daily, but the weekly is kind of in that same spot as well, just slightly less clear because of how one-sided the moves have been. That's the macro stuff, okay? As for the micro, where have we ended up? We've ended up back within this consolidation. What is that consolidation defined by? The top of the range at 38-ish, bottom of the range 32-ish, and the mid at 35-ish. And that's kind of the environment we're in for the time being. So the logical consequence of that, 32 is still support, the bottom of the range, and 38 to 40 is still resistance, top of the range. And if you want to diddle in the middle, that's completely fine. And kind of in the back of my head, I'm cognizant that if we keep pushing lower, that even if the weekly level chooses to do its job, that could come at the cost of spiking these lows. I know that's what a lot of the traders waiting for some sort of big capitulation, backwardation, liquidation event, etc. are looking for. And again, just something I'm holding in the back of my mind. Now, setups, right? Putting these two things together, weekly 38 reclaim probably gives you the continuation setup into the 40s as we discussed. And so that would mean in this juncture, if this is the range high and the market is back below it, that should be resistance. If it isn't, on a weekly closing basis, that would suggest that the rally has got some legs, and I think into the 40s would be the short-term rotation from 38 into either the market structure level or something a bit meatier like the 45, 46 range midpoint. That's not a massive trade, but it's like a decent confirmation trade or like an okay high time frame rotation. It's on my radar, but probably not the best setup in the world. And at the moment, that's not available given we closed below it. So this is resistance until proven otherwise. As I said, until proven otherwise, range in the 30s, given we're back within this consolidation. So I'm not expecting a trending environment this week. That would be a bit weird, but whatever. In the back of my mind, as I mentioned, lows get spiked. Like if this turns into some massive trade below 30k and through these lows, I'd still be looking to punt long, at least for some sort of bounce reversion trade into the range low. So it's something which would look a bit like this, right? And it's that leg from A to B, which would probably be quite attractive. And in the same vein, if we eat shit with Legacy and there's like a massive liquidation event, and these two setups are probably somewhat, would be closely tied together. And what I mean by lick event is, you get your quarterlies backwardated, large aggregated liquidations going up, and you'll fucking know it when you see it, right? In a similar vein, you can see the outcome for that setup is the same as the first one. I'll just be looking for a bounce and to get the fuck out. In terms of something a bit more meaty, it's either the 30k failed breakdown that we talked about into a good looking reclaim, right? Nuke, and then the bearish retest fails completely and it looks strong as fuck. That would be a nice setup. And I guess if we're dealing with much higher levels, as we mentioned for several reasons, that this mid 40s is where you'd expect bearish market structure, the midpoint of the range, yada yada. If that gets reclaimed, that's probably a range midpoint into the range high type of trade that would become available, but that's quite far away, I think, so that's not immediately on my mind. Other /MISC stuff, this is much more important than the setups, because this shit will become clear during the week. This shit is the stuff you forget. So the first is just to chill out. Like, I know Twitter's insane, and you know, inflation's going to 1,000,000%, and stocks are going to 0, and VIX is blowing up, and Russia this, Russia that, but like, ultimately, unless you're really stupid, you'll be fine. And unless you have a very time-sensitive trade, which is well thought out, if you're a beginner who doesn't know what the fuck you're doing, if you feel very, like, rushed and compelled to act by the market and not as a virtue of your own decision-making, then that's probably a sign that you're doing something fucking stupid. So as a beginner, or someone less experienced, especially during like high vol events, unless you need to like add margin to stuff, etc., like don't feel forced to act, because it's very unlikely that your judgment is good enough to identify the good type of urgency from the bad type of urgency, right? More on present themes in terms of correlations breaking. You know, we see like crypto, for example, ticked up while stocks continued to show some weakness. It did the same shit here. So what I would suggest is, if you're going to take longs on the premise that crypto is meaningfully decoupled or there's like a significant show of relative strength, I would simply say wait for a bit more evidence in general, because most of the arguments based on that which haven't worked out, they were looking at like one day of some light dispersion or the correlation becoming weaker, etc. What we want to see, if you know, as good evidence of that relative strength is, you know, a day or a couple days or maybe a fucking week, just something a bit more significant than like crypto going up for a bit while stocks don't, right? Or crypto going sideways while stocks dump, whatever that is. Every time that argument has been made, the markets just kept fucking dumping because they didn't get enough evidence. It was like a few hours of price action. So my suggestion would be that if that's going to be your premise for a long, waiting for a bit more evidence is you know, advisable in order to have a stronger case. I would still say be picky. This sort of the trader side speaking, and I will do like a bigger picture thing right at the end, but I'm still expecting a range-bound environment. Correlation still seems to be in play, and even if this is the Pico bottom, there's a pretty high likelihood that your entry gets retested and the market kind of churns and chops a little bit. So being picky still makes sense, and that's kind of what the last point I front-ran myself, that these bottoms generally take some time unless you're doing business at the extreme wick portion of the move. So even if you get the dead bottom, there'll be structure, there'll be more chances, there'll be retests. There's no massive rush unless you have a very specific setup in mind. Overall, if it's not this type of Armageddon scenario that outlined here, I think, you know, in the course of 2, 4, 6 months, whatever it may be, I think like where the market is right now, this is like a reasonable spot to look for risk if it meets your requirements, right? That's at least what I'm doing. I'm fishing. That's probably the best language I can use. I'm fishing because if it doesn't bounce here, it goes to fucking 0 and we all have fun together, right? But if it's at this do or die spot, I'm obviously going to start looking for setups. I wasn't looking for setups, as you know, at the range midpoint, because that's not where you fucking look to take risk. Once the range midpoint broke down here, I wasn't looking for setups either, because that's just like a dog shit trade. And now that it's reaching the real structural areas, you know, which are significant to me and have this kind of do or die property to them, that's when my ears perk up to start, you know, slugging deltas properly and throwing cash at spot markets, etc., etc. I know that was a lot, but whatever, my mind is a bit fuzzy, and I just wanted to mention this stuff, specifically this stuff, which is way more important than lines on a chart. Okay, TLDR, support, probably still range for a bit. If 30k nukes, we're all fucked. But, you know, it's at a point, it's coming home type of thing, right? It's at the type of area where fresh shorts, I think, are really dense, and you should be very open-minded, at least in the short term, towards risk. That's what I'm doing anyway. I don't know. I shouldn't say you should. Do whatever the fuck you want to do. I can only share my framework. Any questions so far? I know that was terribly all over the place, but whatever. I'm just trying to like combine a bunch of fucking time frames, macro, micro correlations, and yada yada, all this bullshit. So if I missed something or didn't make any sense, just ask and I'll try to answer. What do you think about FOMC event this week? I don't know, like, I'm not a legacy trader. My gut feeling says especially because VIX went up so much and there was like a ton of panic. My gut inclination is that FOMC will bounce markets and it won't be as bad, or, you know, won't just be straight continuation. But I have zero edge there and zero inclination to trade into that event. So I don't fucking know. Do you think we're getting a capitulation event coming up? I'd much rather long the capitulation event, because that's where I trade best. But I'm not taking it for granted, right? I'm not taking it for granted. So it's one of those. Do I think we're getting? I don't know is the answer. I know I sort of want one because it's much easier for me to trade than this sort of weekly support front run type of thing. But I don't. You know, I'm not riding on that hope alone. Noob question equals what is legacy? That just means traditional markets, S&P 500, all this type of stuff. Have you rotated all your alts into BTC and ETH? I wasn't holding any alts for the longest time. I haven't had alts for fucking ages. What do you mean by correlation breaking? So legacy markets have been going down and crypto markets have been going down as well. So by correlation breaking, I mean either legacy going down and crypto going up, or legacy going down and crypto going sideways, or just some evidence that that relationship has changed and we're not going to get dragged lower by legacy. Do you know what Don's target is for his long? Very short. I mean, he replied to me in a tweet, right? I don't want to put words in his mouth. I think he said the bounce to 40s, right? Let me see. If nuke below 30.5, do you think bounce at 24.5 is likely? No. Okay, let me find. Yeah, okay, here you go. Okay, Plato, what's your bounce target? 40 to 48k. If we're lucky, this is still ugly, but I feel like bears need a kick in the balls. 40 to 48k. I'm not using leverage in these conditions. I don't think Duck has like an outright stop. I think he'll just kind of sell it if it looks like shit. How does open interest look? Not terribly telling / different as far as I'm aware. I mean, coin margin's been battered for ages. Stable coin margin is similar. So quarterly basis is at like 4 or 5%. I kind of wanted to see this get backwardated. That would be one of the dead giveaway signs of some sort of short-term bottom / capitulation event. If this shit goes negative again, I As for the other stuff, stablecoin funding, liquidations. So a capitulation type of event, you'd see this spike the fuck up, even though there isn't like a, I mean, yeah, it'd be quite a bit more than what we've seen. Funding, with the perp getting completely blasted and quarterlies getting backwardated, you would see funding spike down quite significantly because of the discount that's forced by liquidations. And presumably, although this is very contentious at the moment, a corresponding decrease in open interests. I've heard really smart people argue that this is short interest. I've heard very smart people argue that it's stubborn long interest. I don't personally have very strong views, and I don't know is the answer. But if this is the type of image we'd get of funding looking like that because the perp gets battered alongside a ton of liquidations, I'd be surprised if OI didn't fall in line and similarly reflect all those forcible closes. But this is kind of the question mark portion. The weekly's green. Excellent. Doesn't really mean anything, to be completely honest, but it's still cool. Still cool. I don't like the long-short ratio. I don't think it's very good. I don't think exchange balance is relevant, to be completely honest. And no, sell pressure wasn't largely driven by the derivatives market, because funding was staying pretty high and going up on some of those dumps, which is to suggest that spot was leading the move. Let me just give you I know I spoke about a shit ton of stuff. Let me give you the super TLDR. Okay. Here's the super TLDR version. The first is that it's been like 40 minutes and we did one chart, LOL. The second is that 30-ish is support. And again, I'm covering my arse here because there's like the quarterly level. It might spike the double, you know, this triple bottom, double bottom looking thing, whatever. It's still 30-ish in any case. Because if it isn't, we're fucked. So you might as well look to do business at the extreme, which is, the market's very close to it. That's sort of trading within that final support that's relevant, okay? As a result, because it's at this do or die, fishing for buys, bounces, not looking for fresh shorts, you know, I want to press the green button. But one, it could take a while, because that's what tends to happen if you're dealing with high time, like volatility into high time frame areas. And specifically, you normally get like a short-term reaction to start, and then it revisits those entries and spends a bit more time before ultimately deciding what the fuck to do. Accordingly, intra-week / short-term targeting, or where is resistance, like even on this bounce, for example, for me it's at 38k. And then if this is some sort of, even if this is like a bearish bottom, that is to say it bounces but ultimately takes a shit anyway, right? So even if you get a dead cat bounce or whatever, if we get something that's fucking visible for a change, because none of these bounces have been visible, right? It's just been straight down. If you get a visible bounce, 45. Invisible bounce, 38. Does this make sense? Is any of this not clear? Because I know we had the super long one because I wanted to mention about a bunch of high time frame considerations and other bullshit, but the TLDR is this, basically. Okay. In terms of ETH, to be completely honest, I think I've got this marked on my main chart as kind of the area where the bounce originated, right? So it's your natural kind of demand zone, if you will. But my eye test keeps pushing this consolidation here, or the range within it. But in the same vein, look, if we go over it quickly, monthly, just like Bitcoin, lowest close support, ETH, lowest close support as well, around 2K, right? I don't know where that's gone on the weekly time frame or why it's disappeared. Hold on. Yeah, you can see on the weekly, it just cuts right basically through that pre-bull run consolidation. Now, just like for Bitcoin, the first overhang / level of resistance is 38K. I think for ETH, my first level of resistance is at 2.7K, right? Just quickly. Something like this. So just like for BTC, there's a larger, there's a larger consolidation, but where the market is trading right now is between 32 to 38K, which is the weekly range. It's the same shit for ETH, except the 32K is 2.2K, and the 38K is the 2.7K. This. Okay? On the altcoin side of things, AVAX finally fucking decided to reach support. Thank God. I know we talked about this cluster and specifically the range high and range low within it. Market basically bottomed right at the lowest close. Crazy how just these levels stay relevant. And in the same vein, range low support, range high resistance. 55 to 70. That's kind of my framework for it. Luna, still at this cluster we talked about on stream. Solana, this is a fun one. There's no fucking weekly structure anywhere close, but there is a barely passable daily level at 80 or thereabouts. And that was missed, so whatever, boohoo. In my mind, the clearest portion of a lot of the altcoin bounces have played out, so I'm not looking to punt any of them at the moment. I didn't see anything super attractive at the time of the stream. I think if you watch the last stream, those high time frame kind of range bottoms, inflection points we talked about in advance, but right now, I mean, the weekly's green. I think the easy, meaty portion of the move is closer to the end than the beginning. And with every uptick, the risk reward of chasing becomes less attractive because we know that price likes to revisit those high time frame areas and not reverse immediately off the first test of structure, right? Talk about one. What do you want me to say? I mean, it fully retraced the whole move. I guess if you get a bounce, this cluster is your first trouble area. But realistically, I mean, yeah, it just fully retraced. If you're not buying the bottom on that, you're probably not worth chasing. Honestly, I want to buy ETH more than anything. I hope I get some ETH, some of my greedy ETH fills, because I think we need a new narrative for Bitcoin, and this is like the super cynical version, because clearly inflation hedge is going to be a really tough sell to asset managers when they look at its performance during periods of inflation. And I'm not like a flippening guy by any means. I don't think that'll be the case. But I think it's easier to sell an ETH narrative than it is to sell a Bitcoin narrative. Again, for all the bounces and medium time frame stuff, none of that matters whatsoever. I'm thinking like longer term, 6 to 12 months. I have an easier time conceptualizing shilling ETH than shilling BTC. ETH BTC not looking too great? Yeah, it doesn't when the market looks like shit, but in bull markets, it always outperforms. Gold is a long, irresponsibly loose fed. I'm not sure if gold is a long. Solely based on ETH USD or ETH BTC too? I mean, in general, I'm a boomer, right? So if I want to be long crypto, I will always start with Bitcoin and ETH. Very often in just like a 50-50 split. And then if things look decent or there's a trend or high time frame market structure's positive, I'll kind of peek my head out on the risk curve, although not terribly far. So generally in bull markets, I make less money than your favorite influencers because I don't go for lower market cap, newer stuff, but I'll always keep a shit ton of it because I keep such close tabs and I'm so risk averse on Bitcoin and ETH. Like I don't buy into decoupling stuff and any of that type of thing. So for me, I still think my edge is primarily in the majors, Bitcoin and ETH, and I kind of just let that drive investment decisions. And if I can ride a narrative once those are already strong, I will. But I don't really trade independent of them all too much. And you can see every time we have the discussion of, oh, well, not everything's correlated, it's a new market, etc., we just eat shit every single time. I still think it's a bit too early. Do I have any pure hold bags? No. But I might get some in the next 1 to 4 weeks. If you had 2.5k, how would you invest it in this dip? I'd probably get a job. Completely serious. That's not even being facetious or cynical. Probably the best thing you can do is get a job to actually have some income and not be dependent on trading really small position sizes and have money to invest, etc., etc. That's like the real answer, Anonymous says, so you don't really believe that this is a long bear market? Thing is, for my style of trading, it kind of doesn't matter because it's level to level, not really holding a ton of stuff unless there's an obvious trend, etc. So if you're talking about buying ETH here, I'm not looking to buy ETH like here. I didn't get filled on any ETH. Let me bring up my own chart stuff. Hold on. So if just kind of the basic eye test, even looking at these levels, right, it would suggest that 2.2 support, 2.7 resistance, there's your range, right? That's it in a nutshell. In terms of, oh my god, this is getting so absurd and quote-unquote cheap, I want to pile into spot, it would ideally be a capitulation event, and within this consolidation. So, trading range, I think very reasonable. 2.3, 2.7, could even see 3K if it's like one of those not very, outsized bounces and ETH outperforms. But structurally, again, 2.3, 2.7. What are your capitulation levels? I think sub 2K, and then really stinky at 1.4 if it gets there. No, again, no evidence of that at the time of recording or whatever. There's just like a ton of variables. This is the reason this particular stream is so ranty and all over the place, because there's so much shit to consider with high time frame structure, where the capitulation stink bids, what's the setup if it capitulates, what's the setup if it doesn't capitulate, what's the short-term range right now, if legacy pukes, if it doesn't puke. There's like a bunch of stuff to go through. So I'm trying to somewhat separate between where we've ended up and where's support, where's resistance, versus, what are credible worst case / significantly more downside scenarios, which I give like a 10% chance to think about as well. I didn't get filled on spot. Let me be clear. I didn't get filled on spot. So I will have to buy higher or buy lower. Pretty simple. And I'm fine with that. I've been waiting since like 58. I didn't mind waiting much longer. Wow, this stream has been kind of shit for me. I've been all over the place. I'm sorry about that. Normally there's a much clearer structure to it and to my thinking. I'm a bit all over the place on this occasion. Hope it's tolerable. Might do another one later this week. Once we get some weekly closes, and not weekly closes, but just some more evidence at these high time frame levels. Because it's quite simple. I've got a high time frame level. If I'm not getting filled in it, I'm waiting. That's it. That's the stream. 2 minutes. What happened on Coinbase regarding Bitcoin bids? There was a very large buyer on Coinbase. Just this entire portion. While stocks continued to nuke, Coinbase was commanding a significant premium. So there's someone really hammering and lifting every offer, buying spot, which is good. Not all heroes wear capes? Yeah. This could move pretty quickly. Sailor buying to flex on up only? Yeah, maybe. I don't think Sailor's execution tends to look like that, though. Yeah, Atom is a very odd-looking chart. Looks like we're going to test that resistance today. Yeah, could well be the case. Could well be the case. And again, it's the weekly close at 38k that will determine a lot of stuff. So wicking above / through it is entirely reasonable. It's whether it turns into a weekly reclaim that becomes significant. SPX bouncing hard? Yeah. There you go. I mean, that in itself, I mean, this really, you know... I just still think, until proven otherwise, I don't expect a V reversal on the high time frames. And if that gets invalidated, I'll simply pay up for my entry. But I don't expect a V reversal straight away. Let's see what Twitter's saying. Kind of sick that in crypto I've put... yeah. Hisaka with the bottom buy, of course. Loma buying Solana, Jewel, Ohm. Nice, okay. SPX closing green. Keyboard Monkey bought the bottom. Charles bought the bottom. Sven Henrik bought Bitcoin, which is very bearish. In Silico memeing. Risk bouncing in general. In Silico posting profile. Blob posting food. David Bell in disbelief, as always. More Russia stuff. What else is there? Nasdaq green. Yeah. Apply dark mode? Absolutely not. Leave your room. Go outside. Anything else interesting? Okay. XO closing some longs. So is George. Bitlord being a content machine. Any Russia takes from yourself? I think invading Ukraine is incredibly unlikely. Incredibly unlikely. I don't have a Russian wife. I grew up in Moscow. It's my first language. Okay, let's just see if this hits 38 to 40k while we're live. With all the crap going down with Tether, where do you keep your dry powder USDC? I mean, USDC and GBP wallet as well. But I don't, yeah. Off ramp for GBP. I know there are a lot of complaints, but haven't had withdrawal issues with like Coinbase. I've used Kraken as well. I'm in the UK, bear in mind, but those two work completely. I've never had any issues. Oh, come on, at least be kind and get to the, get to the level. Have some decency. What is this wick? It's a sign. 38k this stream. Yeah, I'd love that. Hope we go to 0 in a microsecond. Stamp Ape created bottom. We're finally about to engulf his 15% slippage wick. Yeah. Where is that wick? Ah, typical. Of course. Of course. Cred, is this just a bearish retest? I think on a weekly basis, 38 to 40k is resistance. It's not exactly a comfortable bearish retest. I think if you want to make a clear-cut case for a bearish retest, that becomes available as an argument in the mid-40s, where all the reversion stuff lies. I mean, look at, again, basic eye test, right? Basic eye test. If the market's going to bounce, it either happens at 30-ish or 10 to 20k. So there are two areas where it makes sense to look to make bets. A and B. I'm fine with people entertaining this, but it only comes in play if A fails, right? And A hasn't failed yet by any means. And notice where the market traded to. It got very close to the actual extreme of the do or die support. So if there's anywhere you're going to, even if you're the biggest bear and you think this is just going to be a dead cat bounce before it goes to 0 in a picosecond, you still have to pay attention to 30k as the area where you're most likely to be wrong or face some heat or rebalance and look to sell higher, etc., etc. Just like Don said, even if bears are right, late bears will almost always be wrong. It's like, what do you think is going to happen? I don't think this week the market will stay above 38 to 40k. And I don't think this week the market will break down below 30k and stay there. I really think now that we've re-entered this consolidation, 32 to 38, I'd like to see us stay there. If we don't, yes, we can do the Armageddon shit. But that's sort of my base case for the time being. Like, I know it's been way more rambly than usual, and I do apologize, but if there's one thing you gain from all of this, is unless you really know what you're doing with a time-sensitive setup, you shouldn't be rushing in these conditions. There's no need to rush. That's my view. There's always another trade, there's some sort of retest, new market structure, a range forming, price retracing long wicks or outsized moves. That there's always, there's very likely to be a better setup that will reward your patience, rather than punishing yourself for not acting quickly enough, whatever that means, and then jumping into the first trade you can once Twitter flip-flops. a few percent or changes sentiment completely, you know? Do you own any NFTs? Only the dog shit ones. Only the dog shit ones. I think Futurefied makes a good point. You know, enjoy the flow of this one given the market conditions. Time to chill out a bit and wait. Yeah, I agree. I mean, when this shit happened, my argument was that the wick should get backfilled. That took place. Then it's about 32 to 38, which has now been reached. I'm really not rushing into any of this. You think 30k has been tested too many times to hold? I mean, maybe, but not in the short term. Not in the short term. Can we just pump it to 38 so we can see what happens, if anything? That would be cool. When will I be rushing? If there's a capitulation event. There is a very precise answer to that question. I will rush if there's a capitulation event. And if there's no capitulation event, I'll buy within the range. If the range breaks out, I'll get long the reclaim. Like, there's always something better you can do than forcing yourself into positions. What is capitulation? I mean, the definition I'm using is a very large, outsized move, usually through a key swing high / swing low, where volatility implodes, liquidations peak, quarterly futures get backwardated, exchanges go down, all of that type of shit. It's a bit of a misnomer. What I really mean is like an outsized, like a really outsized liquidation driven move. I think the issue is people fixate on capitulation and they'll say they won't long until the market capitulates, but it doesn't always have to capitulate. So you have to at least have some sort of contingency plan for how do I get exposure in the absence of one of those entire crypto falling apart, breaking type of move. Like, for example, there was no real capitulation on this bottom. I mean, you could argue that this leg was, but I mean, it went, look, even in that case, if you're making the argument, even after the capitulation, it went sideways for like 2 months and retested and even traded below the capitulation low. So in any case, there's no rush, right? Okay. What I will say is if you go to trletter.com, it's our free weekly newsletter. If my rambling was incoherent, which is a completely reasonable view to take, the text form newsletter will be coherent and well put together. I expect we'd argue something along the lines of the market has now reached high time frame support, and the first trouble area for a bounce is 38k. If the bounce has legs, we'd expect it to spend at least a week or two here, but ultimately reach for 43 to 47 or mid 40s to see if it's a lower high or a market structure reversal. That's kind of my guess, but I have to sit there and talk to Don about it. We'll give this a few more minutes. I'd love to see it push into here, but might not get it. Okay, that's all I've got. Let me know if any of that made sense, or leave a comment if you're listening to the replay type of thing. We had a very long summary, had a TLDR summary, so I'm going to try not to repeat myself. The only thing I'll repeat is no rush, chill out, make a plan to make your own decisions and stick to it. Don't become the person that flip-flops depending on what type of machine gun of tweets they see on their timeline, you know? I'll probably stream again on like a Thursday just to kind of get my shit together and do a better stream. But for the time being, newsletter tomorrow, Duck on Wednesday, and I'll be back this week before Monday markets for sure. Especially once we get some more data to work with. Okay? That's all from me. Thanks for hanging out. Like the video, do all that stuff, and see you later this week. Bye-bye.